Hey everybody, it's Mark Sebastian, founder of OptionPit.com, and this is your OptionPit Rules of the Road. Reminder, this is for educational purposes only, should be considered investment advice. So as your only option, I want to remind you that you should be reading our options content every single day. Go to OptionPit.com and click on our individual reports. There's good stuff. VIX Edge comes out every day. Pit Report 4 times a week. Power Income 3 times a week. Power Move twice a week. Profits and Pumps 2 to 3 times a week with great trades. The track record on profits and pumps, absolutely unbelievable. So today we're going to talk about big money flow and what we've seen. And I want to remind you that big money flow is when paper comes in and buys big trades. But it's not always exactly what you see. All right. So let's take these PBR November 12 calls. 30,000 trade for 22 cents. All right. They were all crossed. Notice the pricing. These were a buy. How do I know? I look at this market. It was 20 cents at 23 cents. Traders paying 22. That is a buy. All right. Sometimes it's a little more obvious, like when they're hitting the bid on the same strike. But sometimes it's not. It is a little less obvious. All right, because it can be part of a spread. So here's an interesting one. Trader bought the February 11 puts in Ford, or excuse me, October 11 puts in Ford, paying 2 cents, and then traded beyond the offer the 14 puts. So what's going on here? Well, they really sold the 14 puts at 94. All right, so this was actually a put sale on the November 14 puts. A little confusing, but that's what it was. So let's take a look at one that maybe seems obvious but isn't. So we're looking at Apple. All right, Apple customer buys the March 75 puts. These expire in about 6 months. They bought the 75 puts for 56 cents. All right, the March 22s. So let's look at these and see what is going on here. All right, on their own. All right. We want the March 22s. On their own, buying 10,000 of these 46 cents, not a big deal. All right. And then here's the key though. This was done with stock. All right. So what does that do? Well, here's the put without any stock. Now, what if I do it delta neutral? All right, what if I do it delta neutral? What does that do to my trade? I'm going to fix my P&L here. Change it back to today's date. What does that do if it's delta neutral? Well, let's look. While I still probably prefer the stock to drop, all right, look, if it runs, I make money. This is a volatility trade. This is a trade on volatility. It is a hedge. It is primarily a hedge, but it is a volatility trade. And changing stock into trades can completely change the trade. So what do I mean? We see this all the time. Someone will come up to me and say, hey, look, Mark, somebody bought 10,000 of the October 146 puts for 238. They must think the stock's going to drop. All right, well, at its onset, it might seem that way. But when you get stock involved, all right, when you get stock involved, what does this do to the trade? Well, this trade gets me short 438,000 shares of stock. So if I buy 440,000 shares, am I still looking for the stock to drop? No. Am I looking for the stock to move? Yes. That is the difference. If I add stock, it changes the complexion of the trade. And so one of the things you need to be aware of and you need to verify is what is the actual option trade. Was it done with stock or was it done without stock? Because that will change the entire outlook of the trade. All right, everybody. Again, make sure you're coming to optionpit.com every day. Give us a call, 888-872-3301, or email us, support@optionpit.com with questions. Till next week, this is Mark Sebastian, your only option, and I'm out.